Now, in a move which is set to bring relief to borrowers, especially those that have taken loans from banks and those who intend to, public sector lending Bank of Baroda has slashed its benchmark lending rate by as much as 50 basis points, aligning it with the Reserve Bank of India's recent rate cut. Now, with this revision, Bank of Baroda's repo-linked lending rate now stands at 8.15% from 8.65% earlier, effective June 7th. Now, the first rate cut follows RBI's decision on Friday to lower the key policy repo rate by 50 basis points to 5.50%, its third consecutive rate cut this calendar year, as well as reduce the cash reserve ratio by a handsome 100 basis points to inject more liquidity into India's banking system. Now, Bank of Baroda is not alone. Private sector giant HDFC Bank has also eased lending rates by trimming its marginal cost of funds based related rates, or MCLR, by as much as 10 basis points across tenures. Borrowers with loans linked to the MCLR will now benefit from reduced EMIs. According to HDFC Bank, overnight and 1 month MCLR now stands at 8.90%, while the one-year rate is now down to 9.05%. Meanwhile, there's also news coming in from the Punjab National Bank, which has also responded to the RBI's move by reducing its lending rates. According to a bank statement, the revised repo-linked lending rate will now stand at 9.10% for Punjab National Bank, effective from June 10th, down from 9.60% earlier. The Bank of India has also announced a reduction in its lending rates following the RBI's action. The bank has slashed its RLLR by 50 basis points with effect from June 10th, bringing it down from 9.25% to 8.75% now. The revised rate will apply to all new floating rate retail loans and MSME advances as well. Now, these reductions come as part of a broader push by the central bank to spur lending and accelerate economic recovery. Meanwhile, the State Bank of India has also gone ahead and stated that a 30 basis point reduction in lending rates could be expected. Let's listen in first to what RBI Governor Sanjay Malhotra said specifically on the repo rate on Friday.
The Monetary Policy Committee met on the 4th, 5th and 6th of June, that is today, to deliberate and decide on the policy repo rate. And after a detailed assessment of the evolving macroeconomic and financial developments and the economic outlook ahead, the MPC decided to reduce, which is widely expected, the policy repo rate under the Liquidity Adjustment Facility by 50 basis points to 5.5%.